What's up guys, Dr. Ryan here with another episode of Smashing Wealth. In this video, we're going to go over why you can expect another stock market crash in the next few weeks. We'll be going over the big 3 reasons on why we have another stock market crash coming. I will be breaking down all the facts on why the next stock market crash is imminent. This video will help you crystallize the dynamics in the market which are leading up to a stock market crash. We will take it a step further and help you identify the telltale signs of a stock crash from the current actions of corporate insiders in the stock market today. I will even be breaking down why the actions of Congress is steering us in the direction of a stock crash. If you stick around to the end of this video, I'll be expounding on the single biggest igniter of a stock market crash today that is currently gaining momentum under the surface that few people are paying attention to. With this information, you'll be better equipped on your future preparation and investment strategy. By knowing a stock market collapse is coming, and by properly preparing for it, you can exponentially increase your wealth through well-timed investment decisions. By the end of this video, you'll understand why I'm holding most of my portfolio in cash and why I'm patiently awaiting the upcoming stock market crash. This video will be all about the stock market crash explained. So let's get into it. If we are looking for reasons why the stock market crash is almost here in this stock market explained video, we really don't have to look any further than the corporate insiders. I'm talking about corporate executives, corporate officers. These are the bigwigs who have all the inside knowledge. They make the big money, they execute the big moves, they understand stock market basics as well as insider secrets. Right now, stocks have reached some of the most expensive prices it has ever reached. This is all over the stock market news. I have learned that throughout my life that you should watch what people do and not what they say they're gonna do. People can say they're gonna do this, they're gonna do that. At the end of the day, people's actions usually depict the real story of what is going on. Right now, the actions of corporate executives and officers are a telltale sign for the future. There's been a dramatic increase in corporate insider selling of the shares of their own companies. Corporate insiders are selling their shares at a 5 times higher rate than corporate insiders who are buying shares. This has become very clear during my stock market analysis. This means that the rate of insiders selling shares is greatly exceeding the rate of insiders buying shares. If you examine the past decades, you will quickly realize that there have been few times that the sell-buy ratio has been greater than it is today. These kind of insider mass sell-offs of stocks have marked the peaks of markets in the past. There has been an increasingly growing group of investors that don't trust the recent stock market recovery from March, myself included. You don't need to read a book on stock market for dummies to realize the reality doesn't necessarily match up with the rapidly rising stock market. We view what is going on right now as a temporary peak. It seems that the corporate insiders would agree through their own actions. Their rate of selling off of their equities is higher than most times in history. It is clear that they do not want to experience a stock market crash live while still holding on to their current positions. I believe that they feel that they've reached the peak of this intermittent recovery and there might be a big fall ahead. I think corporate insiders feel that their businesses are overvalued and they're converting their paper profits into actual profits while they still can. Corporate entities have so much more data about their company and industries than we do. Their knowledge base greatly exceeds our own in most cases. We can look at financial reports, balance sheets, income statements, and cash flow statements all we want, but it will never compare to the insider knowledge that corporate executives have. Back in March lows, corporate insiders timed the stock market crash bottoms almost perfectly. And it appears that right now they may be selling almost perfectly at all-time expensive highs. Even before the March lows, many corporate insiders sold off their stock holdings in February when the market rose to all-time highs. Now let's take a look at why corporate insider selling is significant and why we should even pay attention to it. If you look at the market as a whole, the overall amount of insider selling across all industries usually indicates that the market will be reversing very soon. The insiders have a historic background of selling at previous highs and buying back in at historic lows. The value of the shares sold has been very large. A lot of corporate insiders are selling right now in a very short time frame, like all at once. I feel that since there's this increased uptrend in share sell-off, the corporate insiders are preparing for a general overall market sell-off, which can lead to another stock market crash. If history is any indicator, corporate insiders, when operating in a largely coherent manner, usually this can be seen as an indicator for what is to come in the overall stock market in the future. Now let's move on to what's going on with Congress. The current actions of Congress will have a huge role in the next stock market crash. I'll be breaking the reasons down in this stock market crash course. One of the biggest government measures that was put in place that has been delaying the next stock market crash is the current stimulus bill. This is one of the primary reasons why the stock market today is up. The fact that the economy is doing so poorly and the market is doing so well is all over the stock market news. Most people are aware that the current federal unemployment bonus of $600 weekly is set to expire at the end of July. At this time, there is no new federal unemployment bill that's been approved to take its place. With this being said, the bigwigs in Washington are back in session and not getting anywhere close to anything that even looks like a firm stimulus plan. The fact is, right now, each side has a different agenda and many conflicting views of whether or not the government has already done enough. The big House of Reps will be going on summer vacation, aka a recess, on August 7th. The problem is that if a new stimulus bill is not passed by August 7th, we'll have to wait until their vacation is over on September 8th to begin working on it again. That'll be over a month and Americans will have no $600 federal unemployment weekly payment. The problem is this would result in more than a month that over 30 million Americans would lose $600 a week in income. This would mean that their income would be drastically reduced down from what they're currently receiving. On average, Americans are getting slightly upwards of $300 a week in state unemployment benefits. That would be about a 66% reduction of income for most unemployed Americans around the nation if they lose their federal unemployment payment of $600. Most people are already living paycheck to paycheck. Cutting their paycheck by 66% can be catastrophic. This immediate, drastic decrease in income would have a devastating effect to millions of households. There are plenty of individuals who have been using their federal unemployment $600 payment to invest in the stock market. Now we are going to have the opposite situation going down. Investors will start selling off their positions in the stock market in order to have enough cash to maintain their living expenses. People will very quickly realize that companies they used to work for aren't reopening, or if they are reopening, they're reopening with less staff that may or may not include them. The dire situation that we're currently in will quickly set in and it will cause a panic. People will cut back their spending, which will lead to businesses going out of business, which will lead to less people with jobs, which decreases spending even further. This can be the start of a stock market crash. Even if another round of stimulus payments go out to the public, it's likely that the income limits will be much more restrictive, and as a result, more people will be excluded when compared to the first stimulus payment. As a result, these stimulus checks will have much less of an impact compared to the first round of stimulus checks. The biggest impact you can have on this channel today is smashing that like button for the YouTube algorithm. No, but seriously guys, smashing that like button and commenting anything down below helps out massively with the YouTube algorithm. It helps this video get pushed out to more people. It only takes you a second and it means a lot to me, so if you feel like helping out, smash the like button, drop a comment below saying, I smashed the like button for smashing wealth. The biggest contributing factor to the next stock crash is the increasingly stressed relations between China and the US. The United States and China are not playing so well right now. It's kind of like if you have these two kids in a sandbox and they're kind of just throwing sand in each other's faces and the whole world is watching. The US just ordered China to close its consulate in Houston, Texas. The US has literally given China 72 hours to get out. For the 3 viewers doing the math, that's 3 days. Imagine someone came to your house and told you to pack your things and leave within 3 days. The US has accused China of taking intellectual property from the US. These great nations have been arguing constantly over trade secrets and trade deals. It seems as if 4 decades of coming together is now completely falling apart. This is a big deal because it has greatly escalated tensions between the world's 2 biggest economies. China said that this is unprecedented escalation. Now China has gotten sand in its eyes, and it's looking to get even. This is a major tear in a diplomatic connection between America and China. China has openly said that it would retaliate against the US for taking such action against them. This can become really problematic for the US. In past situations where these countries have announced negative actions against each other, the stock market has fallen considerably. China is a very big player in the global market as a whole. China creates many exports that we rely on here in the United States. Our economy is heavily dependent on the China economy. If China decided to stop exporting to the US, this could cripple many of our industries. Crippling our industries, destroying companies, which can cause the loss of jobs. The loss of jobs decreases consumer spending, which further destroys businesses, and the cycle continues. This can quickly lead to a stock crash. Sure, we can learn to become self-sufficient in time, but the stock market today will fall and we'll be forced to deal with the aftermath for years into the future. I recently put out a very detailed video on the upcoming stock crash, which greatly expands on why I feel that another stock market crash is imminent. I will link to it in the cards on the upper right hand corner of this video. Just click on the I in the upper right hand corner to get access to it. I will also link to it in the description section of this video. Question of the day: do you believe that the stock market crash is coming? Drop a comment down below in the comments section of this video and let me know. If you made it this far in this video, please consider smashing that subscribe button and turning on the notification bell to be alerted when I release future videos. I highly recommend joining our mailing list by going to smashingwealth.com. This way you'll be the first to know when I release new videos in the future. I left the link to join our mailing list in the description below. Obliterate that like button if you're feeling generous. Feel free to share this video if you felt that this video helped you learn why we are expecting a stock market collapse. You can also hit that save button to bookmark this video to come back to this video later. Feel free to follow me on Instagram and Twitter at Real Dr. Ryan. Don't forget that Robinhood is giving away one free stock just for signing up for a free account. Make sure you claim your free stock from the link in the description section of this video. Webull is also giving away 2 free stocks. You get 1 free stock when you open up a free account. If you deposit $100, Webull will give you another free stock, with this one being valued up to $1,400. You can claim up to 3 stocks for free from the links in the description box below. That is free money in your pocket. Let me know which free stocks you get in the comment section. I hope you enjoyed this video on the stock market crash coming soon. Thank you for your time and support. This is Dr. Ryan. Until next time, have a smashing day.